Welcome everyone to Stock Talk on July 31st. This is the S&P 500 daily time frame, and today is post FOMC news digestion day. You can see a pretty sizable move by the S&P 500 down and closing below on the daily time frame, below the 20 period moving average. So I know what's on everyone's mind is, are we starting this sort of move back down, this sort of move, or this sort of move? Well, the first thing I want to talk about is, once again, pointing towards market psychology. And something is very interesting to me is that how do people perceive these sort of moves? How quick can we forget the up moves that have been made in the past few days? Well, it's pretty quick. You can see the last time we had a sizable down move by S&P 500 down 1%, it's been a while, right? Now, look at this candle that was formed today. When you look at the technical side of things, this is an overbearing candle over a green candle. However, this doesn't come on the top of a range. So the emphasis right here points to a more shallower move back to the downside rather than a more sizable move back down. Let's point to a couple other things that I'm watching. Secondly, take a look at the support area, which is this gap area, 294.30 to 293.40. That area can act as support for broad markets as well. So keep an eye on those two major levels as potential support levels. Third, you all have to realize that this is FOMC day. When we have big down moves on FOMC days, what happens in the days after is really what more important than what happens on the day of. Because many times, whether we go up or down, that move can be reversed rather quickly in the next few days. So we'll monitor that reaction going forward, and we'll see if these major support levels can hold. What am I leaning towards? I'm leaning towards that those support levels will hold. What's a couple of other things that I'm looking at? So let's take a look at a couple of other charts and a couple of other sectors. Are they pointing towards a major move back to the downside? Are we done? And we're done. We made the high this year and we're going to start moving down from now. Let's take a look at one of the sectors, the financial sector. Here's financials. Did we go down? Yes, we did. But how much did we go down? Are we still positive? Where are the moving averages? Take a look at the financial sector. We're still above all the moving averages on the daily time frame. This doesn't point to a more severe move back to the downside for broad markets either. Okay? This is why I'm looking for support levels to hold. Can this develop into something different in the next few days? Yes, but we will see it later on. For now, evidence supports the fact that this is just a normal garden variety small pushback before another move higher. All right, what else do we see that can support the fact? Well, let's take a look at the transports. Here's the DJT, or the Dow Jones Transportation Average. What's going on here? Above all of the moving averages, we're still, as you can see, forming this base in which we can what? Push higher, right? We came down, tested the 20 period moving average. Why don't we see any weakness or further weakness in the transports versus the IWM, right? Those are a couple of things that we want to keep in mind moving on forward. Now, there's a couple of things that we also see on the TVIX chart. One of the concerning things was for TVIX, did we cross the 1517 level today? We did cross the 1517 level, which perhaps shows us that we have a little bit more potential upside for TVIX. But like I said, right now, I'm looking for this pattern to reverse. That is the TVIX pattern to reverse soon back to the downside, the S&P 500 to reverse back to the upside. I think right now what's happening is short-term memory. People are getting some fears based off of perhaps Powell's comments afterwards, and that news-based catalyst can be short-lived. That's what I'm looking for in the next few days. If we start breaking more support levels, perhaps this is something different, but that's what I would want to see. there's not enough evidence in the markets for me to say that this is going to be a major move back to the downside right now. Okay, let's take a look at crude oil. For crude oil, we're still above all the moving averages on the daily, so let's actually pull you back to the daily. So here's the daily time frame for crude. You can see we're still above all the moving averages. This is still positive for crude as long as we hold over the moving averages. So crude is still on an uptrend. So far so good. Now, can we come down and retest the moving averages? Absolutely yes. But this is still on the short term pushing higher. Look for the resistance to be around 61.30 and your near term support around 55.80. For natural gas, this is on a downtrend, but today we had a spike back to the upside. So you can see today natural gas, this is still a downtrending pattern. As you can see, pretty noticeably, we either get rejected at the 50 period moving average on the daily or the 20 period moving average on the daily. So look for this pattern to continue on lower, and we expect rejections off of those areas. And finally, for 4/GC, while we got rejected off of this area, we are still above all of the daily moving averages, which is the 20 period moving average. Okay, so we're still above all the moving averages. We're still consolidating. Let's take a look at the weekly time frame, because this is something I want to point to everyone. Do you see on the weekly time frame how here's the 20 period moving average? We're still a little bit far away, right? But clearly this is still on an uptrend right now. So look for this to continue pushing higher for gold. This, you can see today, we got rejected off initially, but this is more and more shaping up to be a larger consolidation pattern for a potential push higher. So for gold. Okay, so let's take a look at your comments. Moviegoer, you're welcome. I'm glad I can help you with sharing my thoughts on the broad market. Eric, what do I think about Tesla? I'll tackle Tesla in a moment, Eric, but thank you for your comment. And then market speculation, thank you for your comment, and we'll take a look at VZ, which I think is Verizon, but I want to just give my overall thoughts in broad markets first. So with the broad markets, here we have a couple of levels to watch, right? We might be in choppy grounds in the next few days. That's not out of the question if we're under choppy grounds, right? What that means is if we chop around back and forth over here, but whether this is the start of a major down move to the downside, I'll have to see much more than one day, especially off of an FOMC day. Okay? So that's my current thoughts. And yeah, let's leave it at that. Let's take a look at Tesla. So Tesla is on the list on the left, as you can see. So here's Tesla right now. Today came down, actually held up quite well. One thing you want to realize is that Tesla does have a downtrending trend line, and that you can see we have a gap area over here, but that trend line is right at 250. So that's going to be a short-term resistance, and look for that to act as resistance. And if we can't hold that, if we can't break through that resistance, then we have some problems in the near term for Tesla, right? So Tesla, as you can see, gap down. We can fill the gap, but I see many resistance areas above us. So it's not, again, it's when I look at this chart, you can almost make the case that this is the upper end of the range, this is the middle end of the range, this is the bottom end of the range, right? I like to give ranges. Now, if Tesla continues and powers on higher, that's great. But this is, as you can see, just from the medium term and the long-term technicals, still pushing lower, right? This technical pattern is still pushing lower. So you got to be very cautious, because while this looks like it wants to push higher, I can see Tesla reversing back to the downside. VZ, Verizon. So Verizon, based off of today's market move, it's really hard to take away too much, I think, from where the stocks trekked today, because the markets took a big tumble today. So perhaps even the technical side of things won't, or the fundamental side of things won't play out as you expect, because the markets just took such a sizable move back down. For Verizon, this is what we see. This is what we see right here. As you can see, this is sort of like a wedge pattern. It's not the best wedge pattern in the world, but what you can see here is that we are at near-term support. But the big problem here is take a look at the convergence of the moving averages and how we're getting rejected off of the moving averages. So while we have a support, we have significant resistance that's curving lower. So it's not my favorite pattern. I like us to steer clear of these moving averages in the daily time frame to show that, hey, we're breaking out of this wedge pattern and that we can break to the upside. Right now, given earnings, which is tomorrow, we have the potential to move higher, but we're below all the moving averages, so it's a little bit tricky right now. If you were to take a long position while we are at support, we're below it. I'd rather see us gap up on earnings and hold above that level for a more definitive sign. You don't want to, it's like a toss up right now on earnings right now, right? Okay, so not my favorite chart pattern in terms of a possible long position in Verizon. Okay, and that's it for today's analysis. Thank you everyone for watching this video. Again, what the markets do in the next few days will define, I think, the type of analysis I do, the quality of the analysis, and how we proceed moving forward from here. Okay, so thanks everyone. Thumbs up if you like this video, thumbs down if you didn't. Talk to everyone very soon.